Nifty is at 21,842, a gain of 140 points at the day's high. The session highs, the Nifty had gained close to about 400 points. We've got Shiv Sehgal, President and Head of Nuvama, joining us on the show now. Shiv, afternoon, and thank you very much for joining in. While we're celebrating and, India's stupendous rally over the last couple of, months, and particularly in the last 6 months, investors are also taking note of China's underperformance and its valuations. You recently visited Hong Kong. Tell us how investors are comparing India versus China. And do you think money can move to China because there is a compelling case given the valuation difference?
Thanks, Emma. Firstly, thanks for having me on the show, and a very good afternoon to everyone. So you're absolutely right. Before going into the meetings in Hong Kong, I was of the view that, China looks so cheap. We've been talking about it for a while. That, should China have sprouts of green shoots and, the stimulus measures that's been announced, markets, if they tend to rally, the large institutional investors will move away from India and allocate a little bit to China. But it seems to me that the pain and the despondent view on China is so much that it looks very unlikely that that view would actually turn out that way. And to understand that, I looked at, a lot of historical biases here in terms of foreign flows, right? We all know the stats that in the last 3 years, China and Hong Kong have wiped out almost 6 trillion worth of market cap. And what that's resulted is there is both a financial pain plus the largest economy, which is 60 to 70% of real wealth in China sits in real estate. And real estate stocks, if you looked at just the listed space, Chinese listed space, the total market cap has come down from almost $400 billion to $90 billion. Whereas India has gone from the other way, and we have now moved up to 60 billion. So the gap, which was multifolds, is now hardly a gap in that sense, and China has a much larger market. The other element is the FPI flows. From 2015 to cumulatively right now, China has seen an inflow of 562 billion. Last 2 years, the outflow has been about $160 billion. So China is still sitting on a net inflow for FPIs of $400 billion. Now, if you compare to 2015, if I take the same dates and I look at India, we are at a paltry $55 billion. So it shows you the kind of, the outflow that can still happen from a momentum into a momentum market like India, and of course the structural story and the transformation design that we've been talking about from an India perspective. And that is one of the key reasons and elements I keep talking, that liquidity and momentum, along with good macro background, will result in the bullish story that we continue to see in India, and we are seeing that today in the tape as well.
But well put. But as they say, Shiv, right? You'd agree they don't ring a bell at the top or the bottom, right? So at some point it'll turn.
Absolutely.
So do you think there's? But you don't see any case immediately. That's what you're saying. I mean, you wouldn't put your money to work. The last time people tried to do that, especially in China, they got burned again. There was another big dip which happened. Any chance of that now? Yeah.
So Nigel, very well put. I think, a lot of hedge funds actually in October of 2023 went long China, right? And China is down another 20-30% from the entry point there. So you see, the reality of life is cheap can continue to keep getting cheaper, what we have seen in Japan as well. It took 30 years for the Nikkei to come back to all-time highs. And of course, the last couple of months, actually, Japan has been the darling of the markets. It's actually outperforming India. Japan actually saw 17 billion worth of inflow. Of course, it's a developed market, it's a different story. But the reality is that there will always be value pickers who will continue to kind of bottom fish. And China looks like that, those markets. But the reality is that the flurry of recent optimism that resulted because of the stimulus measures has continuously faded and faded very fast. Even I was surprised with the fade in that optimism. And that's a result of, the government is increasingly looked as feckless and lacking the will or the ability to provision a meaningful stimulus in China. And that's the reason. That's why I think, it would be, I think, very difficult to call the bottom, as historically it's always proven that way. And the one thing I do want to say, Nigel, is that, there are pockets within China that look, even if you're not a value investor, like the state-owned enterprises in China today are at a dividend yield of 8 to 10%. The bottom, if you look at the government bond yields, the 2-year yields are around 2%. That to any investor looks very attractive. And I think it's only a matter of time when the international community and the domestic community in China, realizes that, and in maybe 2 or 3 quarters, maybe even sooner, I could be on your show and talking about the fact that China SOEs has been the best investment.
All right. Hi, Shiv. This is Nigel actually here. Earlier it was Prashant, but good to have you on the show.
Good.
So you have convinced us that, with your interactions that India is still the way to go. So that's pretty good news. But so what do you buy in India then? That's the basic question, because a lot of our audience out there, they're wondering, what should you be looking at? And in the last week or so, everyone was talking about maybe PSUs, they'll consolidate a little bit. No ways. The PSU banking index is up close to 12% for this week. Tell us more. What do you buy out here?
So, very rightly said, I think in any bull market, right, the first thing that we need to realize is that a large structural bull market will continue to see rotation within sectors, right? I mean, we have seen what's happening. If I look at just 2024 start, right, we have the industrial services, the oil and gas, and the OMCs doing very well. And I think those themes will play out. Real estate a couple of weeks was rallying a fair bit. And what happens within that structural bull market is that money gets deployed. You see these immediate gains. And of course, there will be, short-term profit takers, and then you'll see a consolidation within that space. As I said, I think it comes down to the bottom line where you stick to your high conviction, good quality companies, irrespective of which sector. And of course, with sector rotation will continue. I think pharma looks very interesting. Tech, despite the fact that, people were very negative going into the earnings season, has had a good rally as well. PSUs, please understand that, like real estate in India, we went through a hiatus of 10 years where it was consolidating and we didn't see gains. And now every month, the transaction volume being put up by any real estate developer are hitting all-time highs. And PSUs, right, the similar trend has started only about 2-3 years back. So a bull market and a structural growth story can continue far longer. I've gone on record saying that, in India, the bull market will last. This is at the cusp, and we are, for the next 3 to 5 years, it's India's story, and we can talk about 10 years as well. But what also dictates a lot is flow and momentum. NASDAQ has been rallying for it started in 2009. It's been now 15 years, and we keep, naysayers keep coming and calling it a top. The reality is that, yes, it looks very expensive, and fundamentally, can you justify these numbers? We are nowhere close to that reality. Yes, the mid caps had a great run over the last 9-10 months, and you will see some time consolidation, which is very healthy. I actually think a pullback would be very warranted by the smart money. There are a lot of pockets and large asset allocators looking for a pullback to come into India and get at better levels, which has not transpired. So should India see a pause or consolidation, I think India remains a buy on dip market, and I've continued to say that because structurally nothing has changed. A bull market will only correct because of external factors. And at the moment, things seem to be primed for a lot more bullishness in India.
Shiv, just finally, very quickly, hi. Just your sense on financials. What's the house call right now? Because I think that's been the biggest point of debate at the end of third quarter. And I know you don't get into stocks, but I mean, if you can give some sort of a view on, again, what's the house call around Paytm and the kind of regulatory action that we're seeing. Actually, it's Paytm is company specific, but even otherwise, I mean, the RBI has really been keeping banks and financial lenders at the edge of their seats with respect to a lot of action over the last 3-4 months.
So you're absolutely right. As I said, I think the banking space, I think the ownership from an institutional perspective was all-time highs in the banking space for the last 1 or 2 quarters, maybe slightly longer. And I think that the next set of rotation, in my view, could be the financial space. A lot of the large caps, private banks have not had a significant rally in the near term. I think maybe if we speak in a couple of months or 1 or 2 quarters, I think that story could play out very differently. Credit growth uptake has been an issue from a large scale perspective from India. But given the budget is behind us now, at least the interim budget, and now we'll see if there is any tinkering to the tax part in July. I do feel that you're spot on. We feel that from a financial space perspective, we have been advising clients that, it's time to get your toe back in and dip a little bit in some of the large cap private banks as well. But of course, the PSU banks are where the rally is, where the momentum is, that can continue. With the fiscal deficit being announced yesterday and the entire bond inclusion, you might see the PSU banks continue to kind of outperform the private space just in the short term. But I would be a buyer of large cap names as well in the private space.
Shiv, great conversation. Thank you very much for providing your insight. Enjoy your weekend. Moving on now. So giving a boost to the affordable housing in the budget, yesterday the